Another week, another opportunity. Hi everyone, welcome to Intelligent Investing. I'm April Tan, Chief Equity Strategist of COL Financial. After 2 weeks of correction, the market finally got its footing. The PSEi gained 0.6%, closing at 6,376.79, while all shares index rose faster, up by 1.5%. Gainers outnumbered losers 172 to 101, and for the first time in weeks, foreign investors were net buyers by 543.3 million pesos. Why the optimism? Rate cuts. On Thursday, we saw May inflation fall again, this time to 1.3%, the fourth straight monthly decline. Add that to signs of slower economic growth like weaker Q1 GDP, a drop in the PMI, and poor consumer confidence. On top of that, investors are betting that the BSP might cut rates by 25 basis points during their June 19 meeting. Lower rates will make stocks more attractive than fixed income assets such as time deposits and bonds. It will also encourage more companies to borrow money to expand their businesses. That's our market overview. But stay till the end of the episode to see not one, not two, but 3 stocks on our stock watch for the week. Now on to our index losers and gainers. The top 5 index losers were CBC, Monde, BDO, ASEN, and Meralco. CBC fell sharply again last week on concerns that it would be removed from the PSEi index if the proposed changes to the index inclusion policies were adopted. This as the PSE is proposing to include the median trading activity ratio, or how much of a company's free float is actively traded, as a basis in determining which stocks to be added to the index. Unfortunately, CBC will not make it to the cut if the median trading activity ratio will also be included. On the other hand, non-index stocks Wilcon and AP jumped by 18.7% and 13.1% respectively on speculation that they would be added back to the index if the changes were adopted. Wilcon will be added back because of the addition of the median trading activity ratio criteria. On the other hand, AP will be added back because the PSE is proposing to reduce the free float requirement from 20% to 15% for larger stocks with market capitalization of 120 billion pesos. Before we leave this topic, I just want to emphasize that the proposed changes are not yet final. The PSE is still currently evaluating comments from key stakeholders to determine if there is indeed a need to revise its present index rules. Now let's move on to the top 5 index gainers. They were Bloom, AGI, GT Capital, Pure Gold, and Ayala Land. Bloom increased strongly again on news that its online gaming platform Mega Fanalo has begun its pre-registration phase and is expected to launch later this month. Bloom has been going up since April on excitement that the company's entry into e-gaming would help profits turn around, since online gaming has been grabbing market share from brick-and-mortar casinos lately. Looking at the rest of the world, we also got help from Wall Street. Last week, the S&P 500 rose 1.5% while the Nasdaq soared 2.2%. Investors are actually looking past Trump's announcement of higher steel and aluminum tariffs and focusing instead on progress in US-China trade talks, as Trump and Xi have agreed to restart the flow of rare earth minerals. Their trade negotiations resume June 9 and will have a huge impact on the global economy, so keep an eye out on that. Plus, the US economy added 139,000 jobs in May, which was slightly better than the expected 125 to 130,000. The slower than expected deterioration of the labor market was viewed favorably by the market and alleviated concerns of a recession. There's a new law which is a game changer for investors. President Marcos Jr. signed the Capital Market Efficiency Promotion Act, or CMEPA, into law. This bill is exciting for equity investors because of the following. It reduces stock transaction taxes from 0.6 to 0.1%. It also provides an additional 50% tax deduction for personal equity and retirement account or PERA contributions of corporates. It's a long-awaited reform that lowers trading costs for investors. Hopefully, this will encourage more active buying and selling of stocks. The bill also provides more incentives for employers to encourage their employees to buy stocks for their retirement. This will hopefully increase investor participation and help the local capital market grow. On top of that, there's another bill turning heads, House Bill 11376, which proposes a 200 peso increase in the daily minimum wage. That's a massive 30% to 60% jump in minimum wages depending on the region. The concern here, higher inflation and job losses. The Senate is only proposing a 100 peso increase, which is half of what the House is calling for. However, even with that, NEDA already warned that a 100 peso hike could push inflation up by 0.2 to 0.8 percentage points and cut GDP growth by 0.1 to 0.5 percentage points. So although our lawmakers have good intentions in proposing a significant increase in the minimum wage, it might just backfire if prices of goods go up further as businesses increase prices to pass on higher costs. More workers could also lose their jobs if businesses reduce their headcount to cope with the higher cost. Now on to our stock spotlight, and this week is special. We have 3 stocks to watch out for. The first one is Bloom. Bloom went up nearly 20% on news we previously mentioned that its online gaming platform, Mega Fanalo, has begun pre-registration. Bloom's foray into online gaming is worth monitoring as the stock has been going up since April. If profits don't increase as strongly as expected, the stock could go down instead. Next, we have DoubleDragon. The stock surged 36.7% after the US SEC approved the registration for Hotel 101's listing on the Nasdaq. Once finalized, the listing will value Hotel 101 at $2.3 billion and the stock will trade under the ticker HBNB. Shares of DD went up sharply as the $2.3 billion valuation of Hotel 101 is significantly higher than DoubleDragon's market capitalization, which was 32 billion pesos as of June 5. After the listing, DD will still be a majority-owned subsidiary of DoubleDragon. DD will also benefit as it will allow the company to raise some capital by selling some shares of Hotel 101 to the public. The amount it will raise is still not yet available currently. And lastly, FGEN rose 13% after it agreed to sell 60% of its gas platform to Prime Infra for 50 billion pesos. The deal includes major gas plants like Santa Rita and San Lorenzo and values the platform at 83.3 billion pesos, even higher than FGEN's total market capitalization of 67 billion pesos. Now yes, this will cut FGEN's net income sharply in the short term since it will own 60% less of the gas platform. But shares of FGEN still went up as the valuation paid by Prime Infra implies that FGEN was significantly undervalued. The 50 billion peso cash windfall that FGEN will get from selling 60% of its gas platform could also fund high-impact investments that would lead to faster earnings growth. The company could also use some of the proceeds from the sale to pay a special cash dividend, since FGEN doesn't need to pay off any debts because it's currently in a net cash position. Looking ahead, all eyes and ears will be focused on the trade talks between U.S. officials led by Treasury Secretary Scott Bessent and their Chinese counterparts. This will take place on June 9 in London. U.S. inflation reports will also dominate the headlines. The CPI comes out Wednesday and PPI follows on Thursday. These will offer clues on whether recent tariffs are stoking price pressures, and they'll heavily influence the Federal Reserve's rate decision later this month. The Fed is scheduled to meet next on June 17 to 18. The market's bouncing back, but there's plenty of volatility ahead between rate cut hopes, inflation watch, and a busy corporate calendar. That's all for this week. If you found this market rundown helpful, don't forget to subscribe for more market insights every week. A new week is a new opportunity. Remember to stay sharp, stay selective, and as always, invest intelligently.